What I'll do is I'll give the weekly overview, just kind of talk about the market, obviously, because we took a nice little spill on Friday, talk about some of the upcoming things this week. I'll mention just some of the trading stuff in terms of stocks and so on. But again, it's kind of hard because if the market, who knows what the market's going to do this week. So it's kind of going to be tough to want to front run in positions ahead of that. So I'll just first, taking a look at the market, I think if anyone's remotely watched the market, they know what's happened. We took a nice spill at the end of the week, going below the 200-day, courtesy of Bullard for the most part. He came out, a couple days ago, said that we could have an intermeeting hike, and we haven't seen that for a little while. So you saw the largest standard deviation move in the 2-year rates since Volcker caused a recession by fighting inflation. So history repeats itself apparently. But so we saw that the 210 yield curve implodes further lower. We're back down to levels from 2020. I'm sure the bond market continues to price in Fed policy error. Now, obviously, they did try to walk back those statements, but I think damage has been done. We also had a new meeting added to the Fed's calendar, if you will. So they're going to be meeting on this Monday. So I think all eyes are going to need to be on that, just in case this is some kind of emergency policy decision or so on. Mike made a thought, and I think it's an interesting thought that maybe if we're lucky, they'll just announce a halting to QE because they're still buying things amidst this record inflation. So that's the thought. We'll have to see. Looks like I was just checking to make sure. So I think the meeting is currently scheduled for 11:30 a.m. So that's what we're going to get. So we'll still have some morning trading. No surprise that the market sold off though in front of all that, because who wants to hold? Who wants to hold right now with what's going on in Ukraine? Who wants to hold right now with what's going on with the Fed, with terrible numbers all around? So you got that, which accelerated us lower. We were actually sitting up here at the high of the range, and then Bullard came in here, and then that's when we started this serious drop on Thursday, and then the follow through came on Friday. Meanwhile, on top of that, like I said, you have Ukraine. All of the embassies are pretty much emptying. U.S., Russia, Britain, Australia, you name it. So no real developments there yet. We'll see what happens there, but that's obviously uncertainty that the market doesn't like. The market doesn't like any uncertainty, let alone uncertainty to that degree. So just a lot of negativity and pressure on the market. So if the Monday meeting comes and goes and it's a non-event, and they don't even mention the Bullard stuff, the market might dip by. You might see some euphoric people get in there, or worst case, you might, best at least you might see the people who piled in short in front of this. Maybe covering and buying the news. So that's what we're going to have to continue to watch on those two fronts. In terms of economics we're getting this week, Monday otherwise is going to be really quiet. Hardly any earnings, no economic stuff. So volume itself might be light tomorrow morning. So just be careful with that, just because who's going to be trading before all of this. So you might get maybe some kind of morning gap on Monday, and then gap rules would apply if we get any follow through. Tuesday we have PPI and Empire State Manufacturing Survey. Wednesday you get a slew of things: 20-year bond auction, industrial production, import-export prices, retail sales, and let's not forget the last retail sales number for December was absolutely abysmal. It was horrific. And we also get the FOMC minutes at 2. Those are for the previous meeting. We'll see if they can shed light on anything. If there's anything that we missed. I'm sure there will be some eyes on that as well. Thursday, you get some numbers: housing starts, Philly Fed, bond auctions galore, and then Friday is pretty quiet with just home sales. So it's a relatively quiet week. It is also options expiration, so that's going to be pretty interesting. Now, going into this week, we'll have to see where a lot of the gamma is going to be lying and what's going to be going on here with the options, especially with everything that's been going on just the last couple of days here, just the last 3 days alone, the gap up and the subsequent drop. We have to see, because we've seen, at least through this period down here and partially through this period, record put buying. So if we could just end up pinned to a level, if no other event can move us, we may just end up pinned to a level if that kind of turns out to be what we have going into options expiration. Who knows? Options expiration is going to be probably not as important right now. We've got enough going on. but it could cause some volatility in the market as well. So it's gonna be a crazy week, and that's why a big reason why it's been short-term trading for the most part, because I don't know why I would want to initiate positions. I've tried initiating some, and some of them were good technical plays, but market just tends to drag things down regardless of what's going on. So that's what you've got there. That's mostly it. I mean, you've got the convoy stuff going on, the trucking riot. Trucking protests, I suppose, and blockades and so on, things like that. Whether that's going to continue to affect the entire market, unlikely in my opinion, but it will affect sectors. We saw the automotive sector talk about shutting down. They had to shut down their Canada and U.S. plants. There was just a lot of pressure there from them. So we'll have to see as that develops as well. So SPY back below the 200 day. Obviously, we'll have to see where we are by Monday, but first I'd watch kind of a little bit of an inflection point here. It's kind of just a little bit of a retracement. But your main level is going to be just the lows down here where we held, kind of around this 428-ish. This is going to be the bigger level if we do make our way down there. Your resistance is obviously going to be the 200 day, because then we want to start getting back up into that body. Qs, meanwhile, they spent all of one day above the 200 a little while back. Now we're actually moving back towards these lows. So the Qs, this is why I think this week it might be good to be watching all of the markets, Qs, IWM, SPY, whatever, because one of them may be a little bit of a front runner for us. So if Qs get down here first, find a little bit of support, we may be able to lean off of that and work off of that, whereas SPY may be an open air. And if Qs get back up in this body, then we're back up in the body, and we'll just have to wait and see what happens. IWM, meanwhile, is actually holding up. And this one is interesting because it was the weakest of the group. It was the one leading us lower. And if I go kind of to like an hourly here, we're kind of starting to break. We just kind of are starting to break this trend line, but it's just finally starting. So if this does roll over, you've got some room to 196. But if it gets back up, IWM was the one that was kind of leading us out. So despite just terrible economic numbers everywhere, that's what we saw there. And then you also have, going into some of the internals, VIX popped up a little bit, but not as much as I thought it would, frankly, with the type of move that we took. So VXN, I think, was also lagging a bit. So Qs, they took a nice little spill. We're starting to get back towards the lows. VXN needs to start getting back up here, likely to 40 as well. And if we go to RVX, you see IWM and Russell volatility has never really taken off. So that's just something to continue to monitor there, because there's not going to be many trades in the Russell, because it's the Russell and no one trades it long or short. That was really it for the internals. Commodity wise, oil and gas obviously just continues to explode. This thing's never stopping. I don't even know what could stop it at this point. So, we had a little pause when it looked like the Iran deal was making some progress, and then the Senate Republicans said they'd block it anyway. So oil and gas continues to go crazy, and there is voracious demand for energy nonstop. The EU continues to go through an energy crisis. We haven't heard too much from China in the way of energy pressure lately, which is kind of surprising. It's been a little while, so I wouldn't be surprised if we saw some headlines there again. But they've been trying their best to ratchet up coal production and so on to try to combat that, but we'll have to see. But oil is getting a little hot up here, so we'll see if it takes some pause up here for a little bit or not. Gold, meanwhile, took a nice little pop when the market was having its issue, so nice explosion on gold. Hey, maybe gold's going to be in play. But for me, gold, kind of guilty until proven innocent. But if there was ever a time to consider playing gold, it'd probably be now. We had the ungodly hot CPI number. You've got inflation galore. You've got people who don't want to be sitting in the market, possibly, or crypto for that matter. I mean, crypto continues to look weak as well. It feels like it's rolling back over. So we might see some people flood into gold. We'll have to see. I'm not much of a gold trader, so that's the extent of my analysis there. And then finally, last but not least, our boys crypto. So like I said, they're kind of already rolling back over here. Not a good sign. I was excited that I thought that they were trading a little more independently of the market, but that no longer seems to be the case. So if it's risk off, then it's risk off, and crypto is definitely one of the risk on signs of asset signs. So we'll have to see how that continues. In terms of what I'd be watching out there and what I'm watching for stocks or opportunities, if I think the market is not going to be an influence in the sense that it either has an inside day or it's going to be in the direction of the bias I want, I've been watching this Walmart This is the bounce point that I think is probably going to fail due to this pitiful bounce that we just had off of it. Obviously, you can also watch some commodity plays. So Alcoa, very strong. NTR, pretty strong. Those are aluminum plays. Vale's been strong. These are miners. I believe they do like nickel as well and a couple other metals. So the commodity plays are going to do well because despite what the market's doing, commodity prices are continuing to explode. I know that DBA is doing well. This is the agricultural commodity ETF that a couple of those guys have been buying. Yeah, God, I'm trying to think of some of the other commodities off the top of my head. Lithium. Lithium was doing okay, though it did get a little bit of pressure yesterday. Uranium, okay. So some of those commodities are showing some strength despite the market. And that's mostly what I'll look for. I'll look for stocks that are kind of ignoring the market. So like this Take Two, I'm still watching these descending highs, waiting for that to break. Hasn't really dropped off after their earnings. You had some other stocks popping. Conagra Brands actually looks like it's breaking out out of nowhere. So that one looks interesting. Obviously, you could play earnings plays, so like Zillow had nice earnings and they popped up and they did a little spinning top here, so I might get a second day play off of them tomorrow, and I'll play it in either direction. Earnings second day plays have been pretty good. Obviously, if Ukraine Russia continues to be a thing, Lockheed Martin, I mean, look at the 2 day swing on that thing from top to bottom to top again, or Northrop Grumman, who's obviously lagging after they had their bad earnings. So you could play any of the defensive plays. Though obviously, if you try to hold something like this overnight, you are at the mercy of any headlines on that. So just be careful. There are other small price stocks, and there's going to be plenty of day trading stuff. So I'm still watching the Trump SPAC. It's still flagging in here. Hasn't broken yet. Ever since it kind of got knocked back down from the rumor that the social media launch is delayed, and haven't gotten any confirmation on that. There's also stuff like this BPT and PRT, small price oil and gas stocks that have just kind of been taken off. I'm watching this PRT in particular. I might take a YOLO swing on this one. These guys have kind of just been starting to pick up on that. I'll probably be looking to short Twitter, honestly, probably tomorrow. They had their earnings. They were subpar, but they're doing a big ass buyback. They're kind of starting to roll back over. How much more can I get, though, is I guess the question. You got to remember how far stocks come, and this thing's come down pretty far. So I don't know how excited I am about that one. Other than that, maybe I'll trade a firm after their earnings debacle, the pre-released earnings slash just implosion. So I might maybe watch that. Maybe I watch Peloton if we start rolling back over. Might look for, whatever's been getting some pop to maybe give some give back. I still like this Verizon. It's holding up in here still pretty nicely. Almost a little inverse head and shoulders forming. I want to see this one pick back up. It's 5G play plus a dividend play, plus it's got these descending highs going into the 200 day. So I'll watch all of this, and obviously you can play energy. Energy's been good. Mike's played energy. Everyone's played energy. Chevron. You can play Chevron. You can play something like DVA. Actually, DVA. Oh no, sorry. This is the medical play. I'm blanking on the other one. But you've got a million different energy plays that you can take. Whether it's a big boy or a small one. I think he might have traded CLF a little bit. Although this one feeling the pressure as well. So I think this is coal. BTU, I talked about coal doing well, and they had good earnings, and they've been exploding. This is a smaller price play as well, and it's also energy, so it's really dealer's choice. Every day is going to be different in terms of what position and direction I'm going to have to look at, because I have no idea what the market's going to be at that time and what kind of headlines we're going to get. But first things first, we're going to have to get through Monday, get through the Fed meeting, and we'll have to see what we get. But that's really it for what I'm looking at this week. It's going to be interesting.